Nigeria, Ecuador and Angola are among countries where oil output has dropped. According to the Organization of Petroleum Exporting Countries, Nigeria's output dropped from 1.85 million barrels per day in September to 1.81 million in October. OPEC had granted Nigeria a higher output target at 1.77 million barrels per day from 1.68 million in July. Nigeria started participating in the deal this year, having been granted an exemption from previous OPEC cuts due to militant attacks that affected the country's output. And to commodities news now, oil prices are up today after OPEC's forecast for oil demand next year fueled hopes that the producer group and allies will maintain supply cuts when they meet to discuss policy on output next month. Optimism that the United States and China may soon sign an agreement to end their trade war also boosted the price of the hot commodity. During morning trading, Brent crude futures were up 19 cents or 0.3% at $62.47, while West Texas Intermediate crude was up by 0.3% at $56.98 a barrel. And for an in-depth analysis of the international commodities market, an analyst from financial derivatives, Tobi Ogunpolu, joins me in the studio. Tobi, it's good to have you. Good morning.
Good morning.
All right. So what's the current narrative on oil prices globally? You've heard what we've just said.
Yeah. So oil prices has been really volatile, especially this week. We saw that at the beginning of the week there was an increase, there was a decline rather in price. Yeah. And that was because stockpiles, that's U.S. stockpiles, increased. We saw about 2.2 million barrels per day, and that was even above the forecast by analysts. And this really affected the price, and the price declined. But currently, we've seen that the price has been increasing, and that is due to the fact that there have been lots of speculations that OPEC might extend its quota till 2020. So this would definitely impact negatively on oil production. So if they maintain the current OPEC quota, then we see that Nigeria will still continue to maintain. We know we've not been complying to the quota. Our quota is about 1.685, and currently we're about 1.81 rather. So we've not been complying, but if they extend this till about 2020, we expect Nigeria to try to comply to this OPEC quota.
Very good. Now, the October figure just released, did it meet your expectations as well?
No, we're expecting an increase in production to about 1.85 or 8.86 or thereabout. Yeah. Last month we saw about 1.85, and this month the oil production declined to about 1.81, which is actually below what we expected. Oil recount too, which is oil recount increased to about 18 operational rigs, and that is that's the highest increase in 2 years or 3 years, and that. Normally, if there's an increase in rig count, we expect that there should be increase in production, because that leads to increase in production or exploration in the sector. But we didn't see this materialize in production, because production declined to about 1.81.
Yeah, very good. Yeah, I'd like you to assess Nigeria's current oil output in line with developments globally, especially with the pricing. What do you make of it?
Okay, so we know that Nigeria has been producing lower than expected. Okay. So we've gotten to about 1.88 million barrels per day. But currently, we've been declining in our production. The reasons are really not open to us right now. Productions have been declining. There's been increase in oil recount. So we expect us to produce more. But however, we know that there's this OPEC quota, 1.68 million barrels per day. So we can't really exceed that, but actually we've been exceeding it. But we still have the incentive to produce more. And I hope that if we do that, then we would see an increase in revenue.
Very good. Now, your OPEC's views on current crude inventories as well. How are they, is it proactive for exporting countries of crude, as it were?
Pardon?
Is it proactive for exporting countries?
Okay, yes.
Like Nigeria and the rest?
Yeah, we know that apart from Nigeria, there are other countries that are under OPEC. Yeah. Nigeria has been producing way beyond expectations. And some other countries too have been declining in their production. So we know that Venezuela, there's been crisis in the country, and there's been a decline. And apart from that, the demand for global oil has drastically reduced. So this has really affected production. OPEC is planning to maybe extend this, and we expect that if this is done, this might have a negative impact on Nigeria. So the thing is, if the percentage in the decline or in the reduction of the quota from about 1.68, if the percentage declines to about 1.5, say OPEC declines our production quota to about 1.5, then there will be an adverse effect on our revenue. Because definitely we know that oil is one of our major exports.
Indeed.
So the thing is, if there's the percentage in decline, if it is more than the percentage, because definitely if there's a decline in supply, if there's a decline in OPEC's quota, definitely we expect the price of the commodities to increase because the supply would be reduced, then definitely price should increase. And if this happens, we expect price to increase a bit. That's technically, that should be the impact. But the thing is, if that does not materialize, then it will have an adverse effect on Nigeria, an adverse effect on our revenue, because we know that is our main source.
Very good. And still talking about specifics here, the newly signed Deep Offshore and Inland Basin PSC Act. What do you make of that development?
Okay, yeah, that's a very good development because that is very welcomed. So President Buhari signed the production sharing contract, and that is good because that would increase our revenue. You know, our debt to revenue ratio is about 5% in Nigeria, and we're hoping to increase the target to about 15%. And that 15% is even lower compared to other countries. So we're expecting to increase the revenue base, and that is a very good area that signing the contract. So what the contract means is that all firms executing deep offshore projects in Nigeria would actually see they would actually have a percentage they remit to Nigeria. So if the price of oil is between $0 and $20 per barrel, they wouldn't have any percentage that they remit. But if it's between $20 and $60 per barrel, they would remit about 2.5%. If it's between $60 and $100 per barrel, they will remit about 4%. And between $100 and $150, they will remit about 8%. So that remittance would bring more revenue for Nigeria. Definitely, yearly we'll see about $1 billion per year for Nigeria. But the thing is, there are two ways to it. The oil firms, the deep offshore firms, would actually see stifled growth because we would see that there will be less profitability in that sector because they would have to remit to the federal government. But apart from that, that's good for Nigeria. We hope that kind of deals continue.
So when it comes to fruition, hopefully it's a win-win for Nigeria, as it were.
Yeah, it should be.
All right, let's take a look at the U.S. China trade imbroglio. So if it doesn't scale through as expected, we also have, we heard, China is making reservations on some agricultural purchases in the U.S. So if this deal doesn't come through, what are the likely indications for global crude pricing at this rate?
Okay, so the thing is, if that doesn't, if the China trade war doesn't go through, if it doesn't work out, if it lingers, then we expect that to have an adverse effect on crude prices, because we know that whenever there's a talk about a deal, trade deal, any trade deal like that, we see that it has an adverse effect on the price of commodities because investors are really out there hoping that this deal goes through. So if this doesn't go through, we expect this to have an adverse effect on petroleum, on crude oil prices. And if this happens, that would also affect Nigeria because, like I said before, that's our major export. That's what gains us our major export revenue. And so this will have an adverse effect on Nigeria's fiscal buffers. We know that our external reserves have been lower. We need more revenue, and that's why the government has been trying to improve its revenue acquisition. So we've seen the increase in levies, increase in tax, which is meant to happen in 2020, then increase in tariffs and all that. So all this has been in the means to improve our revenue. So in case any of that happens, that really wouldn't affect us that much.
Very good. And still talking about the budget benchmark for crude and current oil dynamics globally. So how are we currently faring? Okay,
so currently we're producing above OPEC's benchmark. The benchmark for Nigeria is 1.68. We're producing 1.81.
Okay.
So the good thing for Nigeria would be that we should produce more. But definitely we still need to comply. So there's that dilemma. So we need to comply, but then we still need to produce more for us to gain more revenue. They've not really been insistent that we comply. That's because we know we have our population is high. We just returned from recession and all that. So they've been considerate. OPEC has been really considerate that we've been producing less and we've been producing more rather, and there's not been sanctions and all that. So we expect to produce more, which is good for us.
And I remember not too long ago when the oil price was falling, there was that belief that the National Assembly, which will still scrutinize or in the process of scrutinizing the budget, that they might have to amend the current benchmark. So there was that fear. So to a large extent, we are not going to see that happening at this rate if the status quo remains.
The thing is, 2019, we had the budget of $60 per barrel.
True.
And then they had to reduce it to about $57 per barrel. So that is us trying to comply that, okay, if there's an issue, if there's anything, then we're still guarded, we're still okay. So that's the reason why they amended the budget, the benchmark for oil prices in the budget to about $57 per barrel. So that was the leeway they gave us.
So to a large extent, how would you even describe the oil market currently? We've been noticing some massive drops and up and down movements. So the volatility there, how would you assess it?
So the thing is, oil market is really volatile, like you just said. So if there's any slight issue, we'll see an increase or a decline. So the thing that has been really driving it is U.S. stockpiles. Stockpiles has been really high. It's skyrocketed by 2.2 million barrels per day. Analysts were actually forecasting about 1.6 million, and it came at 2.2 million barrels, like the week ended last week. So that has been really driving the price. And the fact that OPEC is going to have their meeting December 5th to 6th, we expect prices to continue to be bullish a bit.
True.
And that's due to the fact that people have been hopeful, investors have been hopeful that OPEC might reduce or extend its production cut to about 2020. If that happens, if they extend its production cut, not too good for Nigeria, but definitely that would help to curb the prices. And if the price starts to increase, because if OPEC reduces their supply or they extend this production cut, prices is expected to increase. Because definitely supply reduces, then the demand also, so far the demand is the same, then we expect prices to definitely increase. If that happens, that's good for Nigeria.
Indeed. All right, Tobi Ogunpolu of Financial Derivatives, I'd like to thank you very much for that.